Alright, hello everyone, we're back with a video similar to the last video about poorly exam answered questions, but this time from 2018, which was 2 years ago. You were younger, more naive, but you can hopefully learn from the mistakes of your past and learn from the past mistakes of economic students, and hopefully look at some of these questions with your 2020 vision and smash them, because you are going to be smarter because of it. And then hopefully, based on what we're saying before, if you do not learn from history, you're doomed to repeat it. It means that if you learn from these mistakes, if VCAR asks them again, which they are somewhat likely to do, you're going to know their tricks, you're not going to fall for their tricks, and you are going to smash it. So we're going to look at some multiple choice questions, and then we're going to look at some short answer questions. Same as before, we're going to go through them. It's not going to be sample answers for the short answer questions because we have already given those in other videos. There's like a million videos now, almost 100. Go for it if you want to go find sample answers there, but I'd prefer you have a go at writing your own, because it's at a time in the year where you're the one doing practice exams. Just reading my sample answers isn't going to help you. Making your own and getting feedback from them, from your teacher, from me, from friends, that's what's going to help you do really well. But if you want to win one of these beautiful pens that says accounting sucks, economics forever, which is one day going to, the focus will change and then it will show it nicely. It almost did. But Mr. Brian 2020, if you want to win one of these, send me your answers. I'll see how they go. If they impress me, I will reply to you, post you a pen, and then you can randomly have a pen from a teacher from a school you don't learn at that insults another subject. Because why wouldn't you want that? That will make your life better. So, getting straight into multiple choice. Question 2 from 2018. Expansionary monetary policy is most likely to cause A, a decrease in welfare payments, B, an appreciation of the Australian dollar, C, a reduction in the rate of economic growth, D, an increase in the size of budget deficit. So only 47% of students got this right, so less than half. And it's often because it requires not just like a thought of instantly, what does this do? It's like an on-flow effect. And so it's good to be able to like scribble around it to kind of work out these kind of on-flow effects. So if we were to have a pen, well, firstly, I always recommend trying to rule some things out first. So we should hopefully know straight away. If I choose my pen, expansionary monetary policy causes a depreciation of the Australian dollar. So we can cross this one out instantly, because when we have expansionary monetary policy, it means that our interest rates are likely to be lower than our trading partners or overseas, and therefore people withdraw their funds from Australian financial institutions for looking for greater investment elsewhere. So that leads to a depreciation of the Australian dollar, because Australian dollars flood the foreign exchange market, oversupply, etc. Expansionary monetary policy shouldn't lead to a reduction in the rate of economic growth, because that's the opposite of expansionary. So we can get rid of this guy. Expansionary monetary policy, an increase in the size of the budget deficit. Well, not really, because this is kind of like when you start getting into the on-flow effect. So if there's expansionary monetary policy, that means there's going to be increased aggregate demand, which will hopefully lead to increased employment, which then leads to increased tax, etc., spending, all those kind of things. So that's going to decrease budget deficit. So it's going to decrease deficit. Now, if we look at the last option, well, we've ruled everything out. Hopefully you just got to it in the first place. Expansionary monetary policy creates jobs, increase employment. If more people are employed, less is going to be paid in welfare. Boom, done. You got it right. Don't be the 25% of people who say B and D, because they're wrong, and you don't want to be wrong. On the other side, no one said the reduction in the rate of economic growth except that 3%. Probably guessed and hadn't done much work all year. So if we look at the comments here, expansionary monetary policy is one where the setting of the target cash rate is low enough to be stimulating aggregate demand. Stimulating aggregate demand is likely to cause a rise in the rate of economic growth, thereby increasing demand for labor. If more people are working, there is likely to be a reduction in the need to pay unemployment benefits, thereby causing a decrease in welfare payments. Personally, I like my more direct expansionary monetary policy, increase aggregate demand, increase jobs, therefore decrease in welfare payments, but their wordy version explains it in much more detail. So that one, everyone should be getting something like that right. But if everyone gets it right, then it's hard to get a good mark, I guess. So you want a lot of people to be getting it wrong too. All right, next one. This one is super difficult, and I'm impressed that 44% of people got it right. So, which of the following would be the most likely impact of an increase in inflation in the United States? So, we're going to assume that means that in America, that inflation is above or beyond the goal on average. And so when inflation, the RBA or Reserve Bank in general, they want to fight inflation first as it is a precondition to their other goals. So that's going to mean that they're going to increase interest rates. So that's going to give us these two options to start with, and we're going to cross out these bad boys because they are not important to us. So if they are trying to slow things down in America and they increase interest rates, if interest rates increase in America, especially compared to Australia, we're assuming that their interest rates are increasing at a rate that's more than ours. So let's say if both of our cash rates were 0.25, in that case, it doesn't matter where you invest. But then if America increases to 0.5 and ours stays the same, people are going to withdraw their money from Australian financial institutions and invest in America. So that means a whole bunch of AUD is going to end up flooding the foreign exchange market. AUD everywhere, there is an oversupply of it, and therefore the Australian dollar depreciates in value. So that's when we're going to get it to be an increase in US interest rates and a depreciation of the Australian dollar. To be honest, we've been talking about this question for under 2 minutes. I'm really happy with that explanation and the visuals for it. So we're just going to move on. Lastly, another calculation type question. As you can tell, the RBA loves these. So we've really got to make sure that we do them well. What they're going to ask you to calculate is going to be fairly simple, but it's good to know your equations. Like, for example, they haven't used labor force participation rate in a while, and that's something that you should probably know and be able to calculate. They like to go annual or annualized rates of inflation, economic growth, etc. So knowing the difference between those. I know I'm going to spend time with my class tomorrow talking about the annualized rate of things because we did talk about it when we learned it, but I'm pretty sure no one's thought about it since, and therefore it's important for us to look at again. But to look at CPI for these different quarters, our hypothetical economy, with reference to the data on the table, the inflation rate for the year ended June 2018 is. One thing I can tell you with questions like this, when it's for the year and you've got the month twice, you can ignore everything in between that. Because when you are calculating inflation, it's year 2 minus year 1 over year 1. So in that case, we don't need anything in between that because it's not relevant to the year. So that means we're going to have 121 minus 110 over 110. So that's going to equal 11 over 110, which is going to equal 10%. Which is going to, then we're going to do down here. Oh, yes. Surprising amount of people choose 11%. As they see all the 11s and they choose that. Don't be one of them. Make sure you do the full calculation and work it out. It's not that hard. You should be able to do it. You are smart. Getting on to the short answer. So this question is very, very similar to one that popped up in 2019, hence proving my point. If something is done poorly, it's going to pop up again. It was done poorly again in 2019, so alarm bells should be going off for 2020. During 2017 and 2018, Australia's annual wages growth remained weak. Describe how wage growth remaining at low levels might have influenced the stance and focus of monetary policy during 2017 and 2018. So for 3 marks, so stance and focus. So stance, expansionary or contractionary. Focus, what they were trying to achieve. So during a lot of this time, inflation was kind of low, but towards the goal. If we were to make it relevant now, kind of similar, like inflation's low, they're trying to stimulate that now. But if inflation's kind of within the goal, they try and stimulate employment. If they use expansionary monetary policy, this is going to create demand for labor. Which is going to create wage pressure. And so When that happens, expansionary monetary policy is going to create demand for labor, which then puts upward pressure on wages. That's the really important part of this, because we're talking about, we want wage growth to be kind of okay, because if wages are growing at a good rate, people are going to want to get jobs, etc. So it's really important to focus on the wage part of that. A lot of students didn't focus on wages, or they tried to say, like, they were just saying random things about how the RBA could impact wages without that derived demand for labor. So you really want that part that is really important. So describing it, if expansionary stance is going to be one of your marks, what they're trying to achieve with that, and kind of making it relevant to that time period. So as now, if we're doing it 2019, 2020, or 2020, 2021, we are trying to prevent unemployment from increasing any more significantly. So expansionary monetary policy is very important to us right now. Then we have the current account balance. Referring to the graph above, outline one factor that might explain the trend in the current account between 2017 and 2018. As I always tend to tell people, when you look at these graphs, you should probably just draw a line up for the years that are relevant to you, because all of this is just extra data for no reason. And you don't want to look at that, because it's just going to waste time in your brain. And so what we want to know is what's happening in 2017, 2019. So you want to outline one factor that could explain this trend. So you're going to want to describe the trend. So you want to describe that trend. So where it started, where it ended, use the data. Whenever you are given a graph, use the data. Quote that data as closely as you can. If you can, if not, be specific with it. Be as specific as possible. So you're going to talk about the fact that started in surplus, trade surplus, slight deficit, and then a surplus again. But then you have to outline one factor that could have led to that. So you could say like a depreciation of the Australian dollar, which is a really easy one. Because Australian dollar is depreciating, increasing demand for exports, decreasing demand for imports, therefore an increase in our trade balance, we're likely to be in a trade surplus. That significant trade surplus can help our current account move towards surplus. It's not quite surplus now in this thing, it is in 2020. So if you look at 2020, these are both going to be above zero, but that is an important thing to look out for. And then lastly, something that I think is probably likely to come up again in the near future, but it's not really relevant based on this year, but I think they wrote the exam in May, like it could very much come up. They might ask it hypothetically. The government is delivering on its fiscal strategy and budget repair, with 2017-18 mid-year financial, economic and fiscal outlook, confirming the budget remains on track to achieve surplus in 2020-2021. How funny is that to look at now? Explain one reason for the government's rationale related to its fiscal strategy and budget repair and its wish to achieve surplus by 2020-2021. The upside of this is now we can just be like 2030, 2031, because 10 years from now is when they want to achieve surplus again now. But most people got 1.3 out of 3, which is not great. And all you have to do is explain one reason why. Crazy, so many good reasons. Pay off foreign debt. That's not very good spelling. Foreign debt. Save for future downturns. Protect our credit rating. Protect AAA credit rating. All of these are really good reasons why we want to achieve fiscal consolidation. Credit rating. Any of these, getting into it in detail is going to really help you out. So it's not that hard. I've been just almost punishing my students with the amount of fiscal consolidation type questions, because I feel like exams still written in May, who knows if they're updated or not, even though we are in historically large deficits, asking about fiscal consolidation and fiscal strategy has been done so poorly in the past that if they want to ask it again, they probably will. And even if you're able to drop that, we're now not expecting to do that to 2030, 2031. Big note yourself. But they are some of the things that we are trying to do when we achieve surplus and why it's important to do it. That's essentially it for this. As I said in previous videos and in this one, if you have any questions at all about any topic, any requests of things you want me to go over in the future, let me know. I'm more than happy to do it. Especially at the end of this week, I have no more classes for a little while, and I'm just helping people revise in the exam. So I want to help out as many people as possible. If you want to win a pen, send me some answers. Why not make more work for me? Because I love working, apparently. Other than that, I hope you have a wonderful day, and I will see you next time. Goodbye.